Morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning pre-market webcast. Okay, so we had the Fed yesterday, and what it resulted in essentially was a double top. A couple looks at 43, and you started to see the bears try to get a little bit of momentum into the close. They tested. Let's just hop on the hourly chart now. So you get your attempt at a new all-time high in the morning pre-market. They can never get it back during the course of the regular session. Your reaction high off of the Fed was up at 40.75. We were able to get a nice short going in the room at 40.25, which served us well on a trip down to see the weekly pivot down at 28. Now, they took it down to 28. They took it down as far as 25.75, but then they started doing their typical bear thing. They could not convert the weekly pivot. And they took it all the way back up to 24.36.5. And what's important about 24.36.5? 24.36.5 was the pre-FOMC print price. That's a price that we always identify in the room, and it's there for us because it likes to be good support, good resistance. It provided a risk marker for us on a secondary short that we took overnight, and that worked out obviously very well. So we were short against 37. I got personally, I was in at 34. Other people got in right around wherever. We talked about an ad last night at this lower high, which then dropped. We tested down here the daily. I can't spell because I don't have enough coffee in my body yet. You got daily mid band and S2 down here in the 16-17 area. It held that on the first pass, on the first trip down. They bounced it back as high as 21. Our proprietary moving average comes in right around 22, and that's been trying to hold it. It's held each of the lower highs on a 5-minute chart over the course of the night. So right now I have my runner from 34, and I'm waiting. I'm not opposed to trying to do another short if the bears can show up. My principal concern, though, right now is whether we are making a higher low on shorter term time frames. Basically on the 5-minute chart. So here's the 5-minute chart. This is the one I show you guys all the time on the midday update. So you can see the proprietary moving average is just kind of making lower highs and lower lows. If it can break 19, I think it can make a lower low. My concern starts to become when we come into big areas down here like the daily midband, like S2, and those want to bounce. This is where typically the easy money gets made on the short side. People step in, try to get short, and then they get their faces ripped off. So I am cautiously wondering whether the bears have another one in them. If they don't, and if it breaks over the top of 22, then I think it starts to become a long for a look back to 28. I'm also concerned about a double bottom. So right now we're letting our short from overnight work and paying very close attention to the dynamic in here with regard to whether we're going to have more lower highs and lower lows, or if 16, 17 wants to be meaningful. It's going to have an opportunity to be meaningful for sure. Okay. Everybody have a fantastic trading morning. I will catch everybody for the midday update. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.